we're going to talk about the down payment assistance program. There's a lot of top topics out there, or at least a lot of programs that are available for down payment assistance. But do you truly know the facts of down payment assistance? Who qualifies and what is your income levels? Well, most down payment assistance programs is going to follow the 80% AMI limits, which means you cannot make more than $58,320. And so we're gonna do a little bit of I would call it mortgage facts, or at least bust through these myths, because there's people might get information saying, hey, I got this from my realtor, and so they might make over this amount of this threshold, which is 58,320. And so let me go ahead and do my presentation today about the down payment assistance. And so down payment assistance, it usually generally falls under the 80% area median income limit of $58,320. So getting pre-approved. Pre-qualifications and pre-approvals are two terms you may hear used interchangeably when shopping for a mortgage, but they are actually two optional steps you can take to start the loan approval process. The mortgage pre-qualification is usually a much shorter process that requires you to honestly report your own financial information, while a mortgage pre-approval typically requires you to submit more documentations like a W-2 to verify your financials, making it a lengthier process. Neither pre-qualifications nor pre-approvals will guarantee you a loan, but getting it pre-qualified or pre-approved before you start searching for a home can help you more easily find a home you love within your budget. A pre-approval may also make the process of completing a full loan application much easier and faster, because you already have submitted a lot of necessary information to the lender. Borrowers save more using a broker. Borrowers can save thousands of dollars using a mortgage broker. HMDA stating that consumers in 2021 saved $9,470 by securing a 30-year fixed mortgage from a wholesale broker. Get pre-approved for down payment assistance as a first-time home buyer. You can go online to mkgenterprisescorp.com, and then you can go into mortgages, and then you will see the drop-down menu for down payment assistance. Fannie Mae Home Ready program uses the area median income to determine if borrowers meet the 80% or less threshold for possible mortgage help. This tool is what's used by a lot of community loans, a lot of down payment assistance programs. The program is available to first-time or repeat home buyers who have a credit score of 620 or higher. So you normally can be a first-time home buyer if you not have purchased a home within the 3-year period. But for Fresno County, the 80% area median income limit is $58,320. So most people are like, what is the area median income lookup tool? Well, this is what the area median income lookup tool is. And if you see the 80% area median income for low income is $58,320. Home Ready income, that is a program offered by Fannie Mae. And so this service is provided for the sole purpose of showing the applicable area median income, AMI, for each applicable census tract. Lender may use the AMI limits for purposes of determining income eligibility for Refi Now, Home Ready, or other loans that have AMI requirements. And so there's the truth teller right there. When you hear about these loans, about these down payment assistance, and you kind of got to go and do your own research. This is the research here. These are the facts. This is the guidelines. For 2023, the maximum FHA loan amount for Fresno County is $472,030 in areas with lower housing costs. Conventional conforming loan limits for Fresno County is $726,200. The minimum FICO score is a 620. $58,320 is the Home Ready income limits. Find out how much house you can borrow before you start looking, and how you can make the strongest offer possible on the property you choose. What documents should you have ready when contacting a loan officer? When initially contacting a loan officer, you may want to have a list of documents and information available to help answer questions that will that they will ask. One is pay stubs for the last 30 days, bank statements last 3 months, employment history, and previous tax returns for 2 years. The Federal Housing Administration, your door to home ownership. The money you put down the money you put down or the down payment on your home loan can be one of the largest hurdles for many first-time home buyers. MKG Enterprises Corp. Third-party originators offer several options for down payment and closing cost assistance. This type of assistance is often called a second or subordinate loan. Down payment assistance subordinate loans are silent seconds, meaning payments on this loan are deferred, so you do not have to make a payment on the assistance until your home is sold, refinanced, or paid in full. This helps to keep your monthly mortgage payments affordable. The FHA, or Federal Housing Administration, provides mortgage insurance on loans made by FHA-approved lenders. FHA insures these loans on single-family and multifamily homes in the United States and its territories. It is the largest insurer of residential mortgages in the world, insuring tens of millions of properties since 1934 when it was created. The FICO score. You have to have a FICO score, which is pretty much, a financial fitness, or, getting in shape and getting ready to buy a home. Should be at least 620 or higher. That's also going to determine your interest rates as well. But a FICO score of at least 580, you got to put down 3.5% down as a down payment. A FICO score between 500 and 579, you will be required to put down a 10% down payment, as well as mortgage insurance premiums is required. Your debt to income ratio should be less than 43%. DTI. You have a DTI calculator as well. The home must be the borrower's primary residence, and the borrower must have a steady income and proof of employment. Down payment assistance programs. So the 5% down payment assistance on a $472,030 mortgage loan, you will get $23,601 in a forgivable loan. The loans are forgivable normally in 3 to 5 years, considering you don't refinance or sell the home. The money you put down on a down payment on your home can be one of the largest hurdles for many first-time home buyers. Down payment assistance programs offer several options for down payment and closing cost assistance. This type of assistance is called a second or subordinate loan. DPA loans are silent, meaning the payment on the loan is deferred, so you do not have to make a payment on the assistance until your home is sold, refinanced, or paid in full. This helps keep your monthly mortgage payments affordable. Fannie Mae Area Median Income Tool. Fannie Mae Area Median Income Tool. You can go online to AMI-lookup-tool, fanniemae.com/AMI lookup tool. There you will see the 80% AMI is used. Then it would divide your income by 12 months, and then we'll calculate the DTI, assuming it is 45% or less of the AMI income limits. For example, a $58,320 annual income, the AMI limits for low income, you would divide that by 12 months. Your monthly income is $4,860. Then you would times that by the 45% DTI. That will give you $2,187. That must include your interest, principal, and property taxes and PMI. So this is going to determine how much house you can afford and buy. And so it determines the borrower's capacity, ability to make interest and principal payments on a loan using his or her disposable income or cash. What is the ideal debt to income ratio? The ideal debt to income ratio depends on the type of loan you're applying for. Also, lenders may also set their own maximums. As a rule of thumb, you want your DTI to be around 36% or lower than that, and it shouldn't be higher than 43%. Take a look at the guidelines most often used. 36% DTI or less is excellent. 43% DTI is good. 45% DTI is acceptable, but it depends on the type of loan you're applying for and the lender. 50% DTI maximum may be allowed with exceptions. You're going to have to higher credit score when it gets to 50% DTI. Some loans, such as an FHA loan, may accept a DTI of up to 50%. However, in this scenario, the borrower may have to compensate for it by putting more money down or having a stellar FICO score. DTI requirements for each loan type. FHA loans. An FHA loan has more lenient DTI requirements than most loans. The maximum DTI for FHA loans is 57%, but each FHA lender can set its own requirements. This means some lenders can set the limits closer to 40%, while others may stick to the maximum DTI of 57%. Then you have VA loans. VA loans offer an affordable way for eligible borrowers to purchase a home. VA loans have a zero down payment requirement and have more lenient DTI requirements. You may be able to take out a loan with a DTI of up to 60% in some cases. Conventional loans. Conventional loans don't have single set DTI requirements, which the requirement will depend on the specific loan you're applying for and your situation. However, you typically must have a DTI of 50% or less to take a conventional mortgage, to take out a conventional mortgage. Homebuyer education. Homebuyer education and counseling is critical to the success and happiness of a homeowner and requires homebuyer education and counseling for first-time homebuyers using the HUD-approved education program. Cash to close. Cash to close, also called funds to close, refers to the total amount of money you will need to pay on closing day to finalize the home purchase transaction. Remaining down payment. When you signed the purchase agreement for your home, you likely made an earnest money or initial deposit. This ultimately goes towards your full down payment, the remainder of which you will pay at closing. Let's say you're making a 10% down payment on a $350,000 home or $35,000. If the sale of contracts requires 3% in earnest money, you'll pay $10,500 of that $35,000 as a deposit. At closing, you will pay the remaining $24,500. What are closing costs? Average closing costs can be 2% to 5% of the property's purchase price. Estimated closing cost on an FHA loan, $472,072 is $16,262. The specific closing cost you pay depends on your loan type, state down payments, and how much you borrow. A few common fees you might pay are listed below. Appraisal fee. An appraisal is a professional third-party estimate of how much the home you're buying is worth. Attorney fee. In some states, you hire a real estate attorney to finalize title transfer. Title insurance. Title insurance protects you from third-party claims to your home. New title. Application fees. Lenders charge application fees to process your mortgage application. Origination charges. Mortgage lenders charge origination fees to underwrite your loan. Private mortgage insurance. Private mortgage insurance. If you buy a home with less than 20% down on a conventional mortgage, your mortgage lender will require you to buy private mortgage insurance. MKG Enterprises Corp. NMLS 1370394. We're an equal opportunity lender. You can give us a call at 559-337-5990 or email us at homeloans@mkgenterprisescorp.com or go to our website at mkgenterprisescorp.com. MKG Enterprises Corp. Third-party originators offers down payment assistance program through our wholesale channel. The key features of this program are as follows: available for FHA products, available in all states except New York and Puerto Rico. Assistance amounts is up to 5%, but we do offer 3% down payment assistance and up to 5% down payment assistance of the loan amount. Borrowers can use the assistance for the minimum required investment, closing costs, and our prepaid items. Home equity has proven to be one of the strongest ways for families to build and pass on intergenerational wealth. And as a mortgage lender, we are committed to guiding clients through the mortgage process. The assistance is up to 5% of the loan. Borrowers can use the assistance for the minimum requirement investment, once again, closing costs, and or prepaid items. Disclaimer: specific loan programs, availability and requirements may vary. You have to get in touch with the mortgage loan officer for more information. Licensed by the Department of Business Oversight under the California Residential Mortgage Lending Act 1370394, licensed by the Department of Business Oversight under the California Residential Mortgage Lending Act 1370676, and licensed by the Department of Business Oversight under the California Finance Lender Law License 1370376 or 60 DBO 45224. And so I was really glad that I was able to, provide a little bit more detail and insight into the down payment assistance and the 80% AMI rule. This is the, the inverse effect, where this is what determines who qualifies for down payment assistance programs, who is over the income, and this is the the truth teller. And so when you do hear things, that hey, this new program is out, or for certain occupations, if you're a registered nurse, you're a doctor, you're a lawyer, your chances of applying for a down payment assistance program is really not realistically possible because you're over the income. This is going to be for lower income people, people that are under the 58,320. That's why it's called a low income or moderate income, not for those higher income individuals. But if you'd like to learn more about our down payment assistance, feel free to give us a call at 866-675-3933.